Ladies and gentlemen, how's it going? I hope you're having a great day. Let's talk about AMC stock because it did finish up about 3% on the day, looking pretty good actually, closing at 757 as compared to the NASDAQ down about 1%, and Dow Jones basically closed at a consolidation. Now with AMC, what we have seen is a large increase in some of these different numbers that we're going to be talking about. One example is trading volume. Now trading volume today at 37.7 million, this actually eclipsed its 50-day average trading volume of 12.7 million. Now, why could this be? Could there be more interest coming into AMC stock? We're going to be talking about, especially in terms of trendiness and some future movies that could have a large impact on AMC's revenue. Now, if you're new to the channel, hit that like button, subscribe for daily videos. And of course, I'm not a financial advisor, so take everything I say with a grain of salt and do your own research. I'm just getting the facts and sharing it with you. Now, pop it up on the screen. You got AMC, like I said, we see kind of consolidating on the day. 757, we talked about this with the close, up 3%. What I do want to specifically look at is some of the options. Now, talking about the options, we see, especially for expiration at the end of this week here in just a few short days, lots of options volatility and options trading volume below those $7 strike prices. You got lots of put volume compared to the calls right here going up to the higher kind of $8, $9, $10 range. You have lots of people that are betting AMC still has downward pressure coming down possibly to even $5. Lots of option volatility right there. One thing that I did want to talk about though, specifically for AMC today, is we are seeing an immense spike in its actual searches and its trendiness. Now, talking about that, we have AMC that has actually grew 1,150% worldwide in terms of searches after the Taylor Swift announcement of the Eras Tour concert. Now, the Taylor Swift announcement, this Eras Tour is going to be exclusive to AMC theaters, and that's going to be coming on October 13th. What's really great about that is, especially with AMC, that has experienced a significant decrease in valuation due to the 1-for-10 reverse stock split, and of course, with the dilution and now the announcement of selling those 40 million shares, we have seen the shareholders really take the short end of the stick and get beat down But with large revenue movies that we have seen, such as Oppenheimer, the Barbie movie, and now you have the Eras Tour, could these things, especially with AMC, that caused all that dilution in order to raise liquidity, giving it more of a stable cash balance to try to refinance some of those loans, pay off some of those debts, some of those lease obligations. Could they be on more of a steady road in the future? Now, that's a speculative play, but it's great to see that we do have some record-breaking movies that are helping AMC's business fundamentals by bringing more revenue to the company and giving them more things to work with. Now, the company just has to make the right decision on what they're going to do with that money to stop AMC from experiencing any type of bankruptcy. So over 1,000% increase in the amount of trendiness is good. And speaking of movie, what we also did have today is the Dumb Money movie that is being shared with theaters, and that is actually about the GameStop meme stock explosion and the short squeeze that happened in 2021, which is great here because especially AMC really coined that meme stock type logo after GameStop was basically short squeeze. Everybody was looking for what was the next one. So while GameStop could really get attention from the movie release, that AMC, they could also benefit from a strong theatrical showing that could get it more attention from investors and especially maybe bring more shareholders back to the table, because what we have seen is actually institutional investment actually continue to fade. And what we've seen in the second quarter of this year is actually 3 hedge funds have sold their positions and the fourth have dumped 22% of its stake. And what that means is if you have less institutional investment and interest into AMC stock, you do have more retail interest. So will AMC be more controlled by the trendiness of the retail traders? That could be possible if institutional investment continues to decrease. However, still many things could happen, especially with some of the manipulation that we have seen due to the immense dilution in the stock. But where we do sit right now at about that 757, it'll be interesting to see if there's some more downward pressure here. But possibly with AMC, like I said, on a stable cash flow with some record-breaking movies that are coming for it in the near future, could they get back on their feet? And if people have been waiting out on AMC, could this possibly be an interesting time to get in? Now, there is a very high risk, high reward that does come with this, especially right now with the amount of shorts that are looking at AMC. It really depends with how much pressure is going to come from the retail investors. Now, the big question is, did the dilution basically kill the actual retail investors, make them lose their interest in their loyalty for AMC stock, which is really important for the business? Or with these new revenue metrics, these all-time low for prices, will these be possibly another opportunity for these retail investors to get in? Especially with institutional investors that are starting to dwindle, the retail investors might start having more power. So only time will tell what's going to happen to the stock. Let's talk about it. Leave it down in the comments. I'm excited to see, and especially in just the next month here, as the Taylor Swift concert, or not the concert, concerts are going crazy, but as the movie does come live to AMC theaters, I will be keeping you guys updated. Peace out, take care, and I'll catch you guys later.